If you want to be successful, find out what the price is and then pay it. Scott Adam. Well, here's the price for learning how to read stock charts, and think about what that actually means. But the price, 10 to 15 minutes a day, following these charts each and every day, learning what the weekly vertical crossover is, a 2-day recross, liquidity, the importance of that, making options simple, practice trading, the Monday effect when coupled with the weekly vertical crossover in particular, Heikin-Ashi candlesticks, how to use them, profit and loss bands. I can go on and on and on. That's what we're about. That's what you'll learn about each and every day. And if you follow the trainings we post every single day to our subscribers for free at chartingwealth.com, today we're starting over with options. We're actually again into options. This is the first options class, and you will like it. You will get a great deal out of it. Take your time. Listen to it. It's not too long. Options Made Simple. Part 1, how options work. Then we have Part 2. Then we have Part 3. You'll get them over the next consecutive days. So that's what you get for registering at chartingwealth.com, signing up for our daily market review. You'll also get our once a week review. That's our comprehensive review and forecast, and all the special trainings we put out on a daily basis. If you did not get the training on the secret of the Monday effect, well, you missed it. We'll put it back out sometime in the future, but subscribe. Take those trainings every day. Just a little bit of time each and every day will put you along the way to success. Because again, what's more important than having the prescient knowledge of being able to read stock charts, to follow trends successfully? I guess the world is your oyster at that point. You got to practice, my friends. Practice trade again and again and again and again to show yourself approved. Let's jump into these markets. The S&P 500 up a little bit for the day. The Q's up a little bit. Bonds down and gold down just a tiny little bit. Let's see what there is to see. We jump in to the S&P 500. We see that we have a nice good-sized green up candle on our Heikin-Ashi candlesticks. Price percent oscillator heading up. Derivative oscillator looks like it's losing a little bit of energy. We go from the weekly to the 2-day. And of course, the 2-day's losing downward momentum. We had that 2-day crossover. It was a weak one, albeit it was on Friday. But what did we have going for us? We had the Friday effect. The Friday effect. And of course, that blew through Monday big time and on into Tuesday a little bit, up 0.02%. Now, that's not anything to write home about, but Monday was quite beautiful. And of course, we see that 2-day chart, the price percent oscillator pulling away. Derivative oscillators not yet positive. We would love to have seen the crossover and at the same time the derivative oscillator going green. We like it when both cross at the same time, the derivative oscillator, the price percent oscillator. What do we see on the 4-hour chart? A little bit not wonderful. Why? Because we see things topping right now, hitting about the same mark for the last 2 days, ending with a red open box candle. That's a cautionary down candle. Now, it doesn't have any wick on the bottom, which is good. Price percent oscillators flattening, derivative oscillator losing some momentum, but this is only the 4-hour chart, right? How are our bigger charts doing? That's what we always ask. Looking good on the 2-day chart as far as the price percent oscillator goes, which is our main indicator. Looking fine on the weekly, so that's quite nice. Now again, those of you jumping in doing those quick in and out options plays, that's where the weekend effect works so well for you. I hope all of you took that class. We'll put it back out again here in the near future to understand the real secret to the weekend effect or the Friday effect. Now, let's keep moving through these charts. Did any of you who didn't jump in earlier on the 2-day chart consider getting in? That was the Friday 2-day chart, getting in at the Tuesday close. Late, and again, if you did not make it and you just weren't sure enough about the weekend effect, again, if you're practice trading based on the close of the new candle, May be too late, but again, doesn't hurt to just practice and see what there is to learn from it. You might learn, hey, how important that Friday effect really is. What do we see going on the Qs? Price percent oscillator looks like it's losing a little bit of momentum. The derivative oscillator losing some momentum. Price percent oscillator heading up. Nice big green up candle. Very important that that price percent oscillator still heading up. 2-day chart. Guess what happened? We did have a crossover going up. That's where we actually had one. Now, you didn't have the weekend effect working for you, so not as good, but a possibility. How many of you practice traded that at 355 today, somewhere around the close? A 209, 208, 90, something like that. Again, price percent oscillator heading up, derivative oscillator not crossed over yet, but looking pretty decent. Weekly chart still good. What's that 4-hour chart showing? The same topping. So again, pay close attention if you jumped into the Qs. Again, make sure you have your loss limit set. If it works, things bound up for the rest of the week, maybe consolidates, pulls back a little on Wednesday, but then takes off again. That's fine. Make sure you have your loss limits in effect. You got to be willing to take a loss when the charts are giving you signals to get in. But you don't take more of a loss than you have to. You start taking catastrophic losses, you lose everything. But if you're not, it's like in my career as a trial lawyer, I fought plenty of cases where I knew the possibility was I would not win. I knew that going in, but I fought them nonetheless, and they made me better and better and better. I would never fight a case where there's going to be a catastrophic loss for my client if I could just have stayed away from it. But again, that's where your sophistication, your learning, your practice trading helps you make those decisions. That's why you've got to do this every day. That's why you've got to do the practice trades. Now, we leave stocks, we go to bonds. Bonds down for the day, 0.14%. Weekly charts heading down. As far as the price percent oscillator goes, derivative oscillator still losing downward momentum. We have a red down candle forming. Still haven't hit the lows of the prior week, but we do have a nice big red candle, no wick on top like we saw in the past. That's a good sign. Go to the 2-day chart. Bingo! We told you to watch for this. Look what happened. It did occur at the end of the day. Did you consider the Qs? Did you consider the S&P? And as far as rankings go, I would rank the cross on TLT, the better of the three. Next would be QQQ, and SPY would be probably a little late. Even though it was a very, very weak crossover on Friday, you could have been waiting for Tuesday on the S&P 500, but weak. So, nice. What do we see happening here? Price percent oscillator and the derivative oscillator crossing over, going down at the same time. We had a nice down day, 0.14%, as opposed to the Qs up 0.06%. Now again, that's an up trade, and the S&P up 0.02%. So again, as I told you yesterday, you're not practice trading TLT. What are you practice trading? Either a put on TLT if you've taken the options training, or you're looking to buy TBF. What's that? That's the ProShares short. And guess what? It goes up when the underlying TLT goes down. Now again, for simplicity's sake, we just track TLT. We don't switch over between long and shorts. It just sows crazy confusion among people. What do we see going on as far as the 4-hour chart goes? Not much down in the morning, really a green spinning top, then down in the afternoon quite nicely. So again, things are looking good. Hope you practice traded TLT. We'll see how it goes the rest of the week. Would have been nice if all that down action would have kicked in on Friday, but it didn't. So we're dealing with what we got. Last, we go to gold. Gold down for the day, 0.02%. What do we see? Gold is a little less than flat on the price percent oscillator. Derivative oscillator losing downward momentum. Still confirmed down move in gold. Pressure is still down even though we're going the second week of up movement. However you look, the high has not reached as high as the prior high on the prior week. We go from the weekly to the 2-day. 2-day crossed over all the way back on the 5th. It got real squirrely around the 9th and then started pulling away on the 11th and 13th. So again, what do we have right now? Open box top. Now that's a slowdown in the up movement is what we're seeing on that 2-day chart. Price is still above the 2-day trend line. And again, we've got this schizophrenia, 2 days up, weekly's down, means we don't have a trade in gold. If and when we see a crossover going back down on that 2-day chart, might give us an opportunity to short gold. What do we see? Really a sideways slide for the last 2.5 days when we look at the 4-hour chart. So we're waiting for gold to work its way out. And again, excited about where we are and what we are seeing on these charts. And again, remember, TLT, down move. Hope you jumped into it this afternoon. QQQ, potential up move. Hope that you at least considered that this afternoon. Also the S&P, that one is more questionable. The better play, of course, was on Friday, getting that weekend effect. And of course, it's already been very successful. So again, that's where we are. Patience pays off. Practice trading pays off. Doing the training pays off. 10 to 15 minutes a day is all we ask. You hadn't purchased our book? Give yourself a great Christmas present or a great Christmas present to a friend. If you already own the book, we'll send them an autographed copy. How do you do it? You go to the show notes and it will take you to our Square page and we will send you out an autographed copy before Christmas. Again, you want to support what we do here at the channel, do that. Even better, guys, if you want to help us out and be a Patreon supporter, give us a little payback for all the great training that you get for free here. It doesn't come without costs. And again, freeloading, not the way to go through life. We'd so appreciate your support. At that initial level of $30 a month, you get all sorts of goodies. You get to participate in the concentrated training that we do once a month, that monthly Q&A. Plus you get the short chart, long chart, and Bitcoin trainings, and all the other stuff as it first comes out. Plus, if you've got a stock or an ETF you'd like us to help review for you for practice trading, we'll be happy to do that too for our Patreon supporters. And of course, at the intermediate level, you get a free book and you get a once-a-month telephone call. Not everybody wants to participate in that. I encourage folks, but 15-minute call. Happy to do that too for that intermediate level to help you with some personal knowledge so that you can be more effective in your practice trades. God bless, my friends. All the best. Merry Christmas. Happy Hanukkah. Happy holidays to all of you. Thank you for participating. Thank you for giving me this forum. I can't tell you how much it has improved my trading and given me all these benefits of the price percent oscillator, creating the weekly vertical crossover, the 2-day recross, the profit and loss bands, simplifying options, not only for you, but for me. The practice trading and how important that is, the Monday effect, the Heikin-Ashi candlesticks, all the things that have come to me because I've done this have been incredible blessings. God bless you at this wonderful time of year. From the whole team at Charting Wealth World Headquarters.